Hello, welcome to this episode of Rich Insights. I'm Don Rich, the Chief of Investments, or the CIO for Esoterica Capital Management. Today's topic is the retail brokerage industry. All right. We're going to step away from talking about investments and macroeconomic events and focus on current events. All right. Now, why is that? Well, the big news overnight was Morgan Stanley announced that they were purchasing E-Trade. Now that's the second merger in that space within the last few months. You might remember that Schwab recently announced that they were buying TD America. So we're starting to see more and more of consolidation in this space. So I wanted to talk a bit about that, what it means and so forth, and how these companies continue to make money. But the bigger issue is, again, we're going to focus on what it means, because this is really just the tip of the iceberg. We've started to see more and more consolidation in this space, and that, I believe, is going to continue. All right, so let's start by just thinking about the discount brokers, right? The retail brokerage industry. And again, what these players do, they execute trades for retail investors. It's really not much more complicated than that. They do provide some other advice and services, but for the most part, they execute trades for you and I. Now, we've had a major disruptor in this space in the last couple of years. That major disruptor is a firm called Robinhood. Robinhood set up their business model around zero commission trading. Right? They set everything up around the smartphone so you could buy and sell for zero commissions, and they were and continue to be successful in that endeavor. And when they offered zero commissions, and then they started growing their market share, then everyone else had to follow suit. Right? Fidelity, TD, Schwab, E-Trade, everybody had to follow suit. So that sort of raises the first question: is it would seem that these trading commissions are the major source of revenue for these brokerage companies, right? So how are they making money if they're giving away their main product, right? If trading is free, how are they making money? Well, it's really twofold. Right? Going forward, they're not going to make money off their trades, or perhaps commissions will come back at some point. But in the zero commission environment, there's two other main sources of revenue for them. The first is something called net interest margin. All right, that sounds like an accounting term, bore the shit out of you sort of thing, but it's not. It's not accounting. It is an accounting term, but it's not complicated. It's very simple. It's very intuitive. Net interest margin simply means that when you sign up for these discount brokerage accounts, you give them the authority to sweep excess cash out of your account every night. Now they pay you an interest on that cash, but they pay a low rate of interest, and then they invest that money at a higher rate of interest. Right? It's that simple. That's called net interest margin. Right? They're winning from on the difference between the interest rate they pay you, the retail investor, versus what they can get from the reinvestment. All right, net interest margin. And that net interest margin was a very important factor in Morgan Stanley's decision to purchase E-Trade. it is a huge source of cash that these firms often need. Now, in addition to net interest margin, they also hope to sell you more goods and service by giving away the trading, right? On zero commission trading. Now, what I mean by that, think about it, it's very simple. It's equivalent to McDonald's giving away the drink, for instance. They give away the drink, and why would they do that? Because they hope to sell more hamburgers, fries, Happy Meals, and that sort of stuff. So that the brokerage industry is hoping that by getting you in the door with zero commissions, then they can sell you higher margin products and services. Now, whether or not that turns out to be true or not, we'll see going forward. But the bigger issue, I wanted to focus on the bigger issue. What does this mean? The bigger issue is we've just seen this massive, massive amount of fee compression the last 2 to 3 years. And that's true, again, across the entire money management industry, not just the brokerage industry or the discount brokerage industry. So I think we're going to continue to see more and more mergers, more and more consolidation in this space. Because as we're having profit margin compression, right? Fee compression is giving rise to profit margin. Firms are going to have to reduce their cost. They're going to have to become more technology oriented, right? More robotic. They're going to have to figure out a way to operate with tighter spreads. And as I said, I think that is the wave of the future. So what we just experienced the last couple of months with Schwab buying TD America and Morgan Stanley buying E-Trade, that is just the start, right? The avalanche is coming. You're going to just continue to see more and more mergers in that space. So again, that's the message for today. Expect the consolidation to continue here. All right, I'm Don Rich. You've just experienced a Rich Insight. It's February 20th. I hope you enjoyed it. We'll talk again soon. Thank you.